Hey folks, welcome back. September 25th, 2025. This is the Focus on Index Futures. We're focusing on Christmas NQ E-mini futures, NASDAQ E-mini futures. So let's take a quick look at what we have here today. All right, so today is Thursday. Daily chart on the left, 1 minute chart on the right. So we have this premium wick highlighted with these gradient levels. We have a buy side imbalance, sell side inefficiency, fair value gap with the gradient levels added to it as well. Then we have a buy side imbalance, sell side inefficiency, BISI, fair value gap there as well. And then we have a discount wick with gradient levels on it. So as I mentioned on this day here, that we were entering a time when an intermediate term high should form in NASDAQ. And I think by anyone's standard, that would be considered an intermediate term high. Not calling the top. I'm not trying to get overzealous or anything, but that's how formidable you are once you understand how to read the tape, read price action without order flow stuff, without level 2 data, without any other stuff. Now you can use it if you think it helps you. Okay, so if you've been consistent and you're able to find profitability using that stuff, and you want to believe and place your faith in that religion, then wonderful. That means that you're giving yourself, the cheerleading aspects that you need to do as a trader. But if you don't have any subscription to that, there's no need to reach for it because there's really no advantage at all. I didn't use any of it when I was outlining this market this week and last week, and I'm right on the tick. So this goes to show you don't need all that stuff. Look here, regular trading hours, 9:30 starting. Okay, the market breaks down. I have a fair value gap there. We'll look at that in a moment. Another fair value gap there. Small little consolidation and drops down into the blue buy side imbalance, sell side efficiency, fair value gap. This line here, 24,437 even, is this level here, which is the upper quadrant of this discount wick. You see that? So, and it's also very close in proximity to what would be the lower quadrant, but it doesn't quite get there. So if you put your fib on, you'll see that it doesn't quite get to it, but it got real close to it. So if you're grading the fair value gap itself from this candle's low and this candle's high, you would see that it got real close, but did not trade to it, but the upper quadrant of the discount wick it did. So which one's going to be easier to get to? This one. Okay, and price did in fact trade down into it here. Comes back up, trades to the high of that discount wick at 24,502. You see that here? It trades back down to the upper quadrant of the discount wick, that level right here of this wick, and price starts to rally. Okay, I mentioned how we would see the likelihood of reaching into fair value gaps and discount wicks and premium wicks and grading them a week ago. Okay, and actually, it's really technically last Tuesday, so it's more than a week ago. But we can see the reactions off of these levels here, which is not a pivot point. It's not any kind of retail logic. It's not classic support and resistance. Okay, but it allows you to look at wicks in the same vein as I do with inefficiencies and or gaps. So the market rallies up, trades back inside the green buy side imbalance, sell side inefficiency, and trades up to the lower quadrant of it here at 24,578, and then to consequent encroachment, upper quadrant, and all the way. Look at the body respecting the perfect delivery of that close is right on the 24,655 high of that bullish fair value gap right there, which is that candle's low. That's beautiful. And then it drops back down just below consequent encouragement. One more time, hammers the upper level of that fair value gap on the daily chart. Once more, trades lower, immediate rebalance here, and rallies up. First presented fair value gap, you can see forms here. Here's 930, and the first inefficiency is there. Okay, so nice displacement, very obvious, and it's a sell side imbalance, buy side inefficiency. So when I annotate, it's first potential fair value gap in the form of a bearish fair value gap. Why? Because it's a down closed candle. Trades up into it here, just falls short of consequent encroachment, breaks lower, institutional order flow entry drill, and let's extend that first presented fair value gap. You can see that we have an order block down here. It's bullish, changes state of delivery after it trades into that upper quadrant of that discount wick. Here it is on the 1 minute chart. It retrades back down to that order block there. The body's respecting it, sends it higher. Institutional order flow entry drill here. And now, because price trades above the first presented fair value gap and we're trading consequent encroachment, it's a SIBI at first. So it's going to change its character to what? Now it's a bullish scenario. So we would look for this to act as what? Discount sensitivity. If it's going to trade down to consequent encroachment, it should not trade to the lower half. It does, in fact, do the very thing here. So that's the logic I've been teaching you. Rallies up, creates a buy side imbalance, sell side inefficiency. And here, sets another bullish fair value gap, leaves a small portion open, rallies up, does all the business we talked about here. But now we'll put the gradient levels on there, and you can see how it was respecting a lot of those levels as well. And we're going to need to take that fair value gap and extend it forward, so that way we can keep track of what we're referencing when I move forward in time. The first is very, very tongue twister. The first presented fair value gap resumes being a bearish fair value gap once we trade down below it and hits the consequent encroachment and breaks outside of it. That means it's likely to trade lower. Where does it trade to? Inversion fair value gap. Inside this low, we have an order block, which is these two consecutive unclosed candles. And then we have the little gap right there, extend it through the candle. That's why we're not supply and demand. And the bodies respect that beautiful delivery and sends it right back up into the upper fair value gap here. This gap, when it was formed, was a BISI. So it was an up-close candle, fair value gap. That means it's likely to be bullish. You can see it being utilized here. But when we trade down through it and come back up and then fall back down through it again, the upper half needs to be disregarded. In other words, only sensitivity at the consequent encroachment level or below it. And we can see that being shown here. And then it's stacked right on top of first presented fair value gap, now resuming its bearish initial creation, which is city, down close candle. So now it trades at the consequent encroachment there, breaks lower, hits the 24,553 level, breaks aggressively lower into that inversion fair value gap. And then look at the strong reaction off of that. Look at that. So we're going to scrub forward. There's that inversion fair value gap. It rallies up. Now the first potential fair value gap changes character once more. The bodies are respecting consequent encroachment. The wicks are allowed to do the damage. Comes back up, hits it here, rallies up, upper quadrant of the previous fair value gap that was above first potential fair value gap, and trades up into the upper quadrant of the fair value gap over here at 24,629.5. That's what we're seeing here. Back down into bullish fair value gap and consolidates into the close. So I tried to keep the annotations in the PD arrays kind of like short and sweet and focusing on the relationships of the first presented fair value gap and the other fair value gaps, how they change their characteristic intraday. So as the ebb and flow of price delivery above and below these fair value gaps, it allows you to switch your short-term bias to where the next pool of liquidity would reach for or the next inefficiency above or below. But having the understanding of when these form and how you're looking for price to draw to very specific levels, it helps build your tape reading repertoire. So it gives you skill set that will increase over time. You can't do it, as much as you want to learn how to do it real quick and be very efficient at it. My best advice, and I get this question a lot in email and I get it in comments that I don't approve on the channel because I basically hold a lot of the commentary and I guess posts by other people because there's a lot of these weird crypto, like there's a lot of crypto stuff being posted, and I don't want to go in there and have to clean all that stuff out after it's been posted. So it's easier for me to just I read all your comments, but I'm not going to authorize them to go to the channel because it's just something I just don't want to be babysitting. So there are comments allowed on certain videos, and honestly, I don't keep up with which ones they are. But anything you send to me, even though you don't see it, you think you see it on the channel, but nobody else can see it. I still read it. So I appreciate all your sentiment. I thank you for all your very kind remarks in regarding to my loss of my older boxer Bailey, and also the work I'm putting in here. And I appreciate that. I'm thankful for that. But in closing, I want you to think about how we dove down pretty deep into this fair value gap, and tomorrow's Friday. So the range of Thursday was pretty significant. So, in my opinion, I would keep my expectations very low for tomorrow because it's already done enough. You know, if all we had to do was anticipate what we anticipated this week for Nasdaq and it delivered like this, whatever it did on Friday, tomorrow's trading, who cares? You know, it doesn't make a difference because this was such a wonderful display of prowess, being able to understand what the market should and shouldn't do, and the sensitivity and precision of the concepts I'm sharing with you. So hopefully you found this insightful. I'm probably going to have obviously a review tomorrow evening, but there won't be an extra recording over the weekend. So I need my Saturday and Sunday time to, just kind of ground again, and then we'll be back at it again on Monday. So I guess enjoy your weekend. And for those that want to see the Forex stuff, I'm going to finish this one up. And then a couple minutes after I finish it, I'm going to grab something to drink real quick, and then I'll do the Forex review. I'll talk to you next time. I wish you good luck and good trading.